The global financial system is inherently unstable. In fact, I don't think it's ever been more unstable than it is right now. Well, every 1% rise in interest rates is about $300 billion in net interest expenses that the government has to fund. And that just wreaks havoc on an overly leveraged, over-indebted financial system.
This is Kaiser Johnson with Liberty in Finance, and this is the Miles Franklin Weekly Special for May 2nd through May 9th, 2023, while supplies last. In our first special in more than 6 weeks, we are excited to feature the 2023 Australian Silver Kangaroo at just $4.85 over spot. The 2023 Silver Kangaroo from Australia are renowned for their 4/9 fine purity as well as their recognizability and design. Like many other coins, they come 25 to a tube. However, unlike others, the Australian Monster Box is just 250 coins, making it the most affordable Monster Box available, especially with a premium of just $4.85 over spot per ounce. And finally, Silver Kangaroos are IRA eligible. And if you'd like to learn more about a precious metals IRA, an IRA holding assets in a private depository rather than a bank or brokerage, call us, and we'll be happy to help you in that process. To order this special or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.
Hey everyone, this is Elijah K. Johnson with Liberty in Finance. And back with us today is our good friend Steve Penny, the Silver Chartist. Steve, thank you so much for joining us today.
You bet, Elijah. Thanks for inviting me back. I think this is twice in a row now where we're talking when the metals are actually up, where for a long time there, it seemed like every time we talk, the metals were just getting taken to the woodshed. So nice to talk on a day with gold testing it, just sitting right beneath its all-time high.
Definitely. We've had a few events in the last week that have really pushed gold higher. It seems like we had First Republic Bank collapsing, being taken over by JP Morgan. And then we also had the Fed meeting yesterday where they were raising rates 25 basis points. And it seems like some people out there think that they signaled that they could be pausing soon. Your perspective on kind of the macroeconomic environment right now we're seeing that is making metals run right now.
Yeah, I mean, these headlines are certainly helping. They're providing the short-term catalyst here. But from a macro perspective, to answer your question, you, me, and the guests you've had on your show for years now, you've been documenting this for a long time, have seen all of this coming. So from a macro perspective, none of this is surprising. We know that the global financial system is inherently unstable. In fact, I don't think it's ever been more unstable than it is right now. And we're seeing signs of that, and it's going to persist. There's a four-letter word for why this isn't surprising and why this was all but inevitable, and that four-letter word is math. When you have a $31 trillion national debt and raise interest rates at the most aggressive pace ever, math is the reason why this becomes unsustainable. Every 1% rise in interest rates is about $300 billion in net interest expenses that the government has to fund. And that just wreaks havoc on an overly leveraged, over-indebted financial system.
I did want to discuss the charts. If we look at gold and silver right now, it seems like they're breaking out here, especially the last couple of days. Gold has really risen quite above $2,000.
It sure has. And as I'm pulling up the chart here, again, I think your listeners are probably all on the same page with where gold and silver are headed in the years ahead. So knowing that, and knowing that it's going to be a wild ride, I think having a strategy in place becomes the most important thing right now, as opposed to shorter term predictions. And if you're listening to this right now and you don't have a strategy for when are you going to accumulate or when are you going to take profits, now would be the time to, I think, consider that, because the pace of change is accelerating. And we're going to start seeing amplified volatility in both directions in the metals. I think we're going much, much higher, but it's going to be a wild, wild ride, and people need to craft a personalized strategy. So now that I have the chart up, this is a long-term chart for gold. I've shared this with your listeners before, and everyone knows the significance of $2,089. That's the previous all-time high, but it's also the top of this cup and handle pattern. So this is a very simple pattern. I like simple patterns that are obvious to everyone. Anyone who looks at charts sees this pattern, and that includes institutions, high net worth investors, the big money and generalists that we need to come in and, for a sustained uptrend. So once we get through 2089, the next measured move target, the most conservative of which would be $2,500. That's the most conservative measured move target. The next one would be $3,000 if you use the base, and if you use a log scale, you can get up to like $4,000. But let's just say 2,500 once we get through $2,089. Now, we're not above that yet, and we're getting a bit technically stretched on the shorter time frames. So I'm going to pull up a daily chart here. And, short term, I think caution is warranted. One of my general rules is that if you're extremely overbought against key resistance with RSI stretched, there's a very good likelihood, probabilities suggest that you're going to get a pullback before you punch right through that resistance. So you can see here, we came up to 2085 this morning. There's this long upper wick right here. So that shows sellers stepped in today. I mean, still, the market hasn't closed yet. And RSI is getting a bit stretched here. So I wouldn't be surprised to see some consolidating below 2089 as we build energy for the next move higher. So if you're looking to buy dips, you might get one here pretty soon.
And what are some of the price points that you're looking for gold to pull back to?
Yeah, the most simple one would be here. If I draw this over, so you can see what was resistance at about 1975 is now support. So 1975 would be initial support. And then you've got this 50-day moving average, which is rising. And right now that 50-day is about 1950. So let's just call it for rough numbers. I mean, if you saw pull back towards 1950 or even down towards 1900, I think that would be a fantastic buying opportunity. Because once we get through 2089, I think things are going to start to accelerate to the upside. And you don't want to be chasing. You want to be positioned ahead of time.
I guess it doesn't seem like too much of a pullback. That's only 5% or so from here.
Yes, these are very emotional markets. I don't think there's a more emotional market than silver and gold. So yeah, 5% pullback really isn't that big a deal. But let's say you pulled back 130. That's $130. People are going to be they get emotional about it, and it feels when we talk about it now, it's it's not that big deal. But if you have a couple of $50 down days, people's emotions start to get riled up. So having a plan ahead of time, saying, hey, I'm going to look to buy a dip towards 1950. Having a plan ahead of time helps to remove those emotions.
And as for silver, we've obviously seen a bigger move on a percentage basis here in the last couple months, and we're looking at about $26 silver right now. Are you anticipating a pullback for silver as well here?
And I want to use careful language here. I think I deal in probabilities, not predictions. So I think probabilities do suggest a little pullback here, 5-10%, something like that. But that doesn't matter to most people. Like if your strategy is to simply have some physical metal and wait until all this plays out, it doesn't really matter to you. Now, if you're trading the swings like I am, that's where these 5-10% moves do matter. And I only trade with a small portion of the portfolio. But here's a longer term chart for silver. This goes back to the August 2020 high, and then we had a double top on the silver squeeze day in February 2021. Well, we broke above this downtrend line. I call it the silver squeeze downtrend line that had contained price for over 2 years. Nice clean breakout, and then we back tested it, and now we're running again. On the weekly chart, starting to get a little bit overbought here, but I think $30 silver has a magnet in the weeks and months ahead. In the intermediate time frame here, let's say over the next 6 to 8 weeks, rough time frame. Getting through 30 is going to be a tall order, but once we do, I think 30 is kind of like the equivalent of 2089 in gold. Once you get through 30, that's where we can start talking about $40, $50 silver in the months ahead. But 30 is going to be a big resistance level that everyone and their brother is going to be watching. And I think we're headed there sooner rather than later. Now,
as for the short term here, 5-10% pullbacks, though, put silver probably around the 23, 24 level.
Yeah, if that happens, you can see the RSI is more overbought. Like you said, silver's run further than gold. It's making a new high here right now, which is bullish today. Right now, it's got as high as 26.32. What was resistance is now initial support, 24.78. I think that would be a really nice buying opportunity if we pulled back that far. It's just over $1.50 or so from here. You've got the 50-day moving average and then the 200-day down here. My very favorite spot to accumulate in an uptrend, and you don't get very many of these opportunities, is pullbacks to a rising 200-day moving average in an uptrend. If you get oversold above a rising 200-day, it's a statistically optimal place to accumulate. Let's put it that way. but they don't happen very often. We got one right here back in March. And that was my last time I was scaling in aggressively to mining stocks in the metal right here. That was a 200-day moving average pullback, and boom, look at where we ran to. I'm not saying that'll happen again. In fact, I don't think it's going to. But if that were to happen, that's where I would really kind of back up the truck.
Before we move away from the metals here, could we discuss platinum as well? Because it's interesting. We've actually seen a bit of a pullback in platinum here. So your perspective on that, is it a good opportunity right now, or do you see a further platinum to pull back further from here?
Yeah, I absolutely love platinum. It makes up about 20% of my own core portfolio in physical metals. That's aggressive. That's not for everybody. But I think platinum has the potential, if not the likelihood, to outperform gold by a wide margin, and potentially even silver. I'm more bullish on silver, especially from a risk-reward perspective. But platinum, when it goes, it can really run, and it's probably the most undervalued of the three metals that we talk about on a ratio basis. So here's the daily chart for platinum. I drew this white arc pattern here a few weeks ago, back when it was kind of forming right here, and you can see how it's respected that perfectly. And right as we're talking today, we're testing that support perfectly, and we have pulled back. Platinum had a really nice run. So if you're someone who likes to buy pullbacks to support, I think platinum right here looks really good. But one of the things that has me so excited about platinum is its the ratio when you measure it against other metals. So I'll just show you a platinum to gold ratio to kind of highlight what I'm talking about, if I can find it here. But platinum, just to get back to the ratio it was at a handful of years ago, platinum would outperform gold by a factor of roughly 2. And I think that's very, very plausible in over the next couple of years. So my plan is to swap platinum for gold. That's assuming both metals are available at the time. That's why I wouldn't go all in on this strategy, because what if you want to swap them and then you can't get any gold? The dealers are all empty. But here's that ratio chart I was talking about. Historically, platinum trades at a premium to gold. Well, right now, platinum is cheaper than gold, and it's almost half the price of gold. It's about 0.51, so let's call it half the price of gold. That's a historic anomaly that, as a contrarian speculator, I like. I see opportunity here. We get back to this ratio, platinum could outperform gold by a factor of 4. I think I said 2 before. I meant to say 4. So potentially trade 1 ounce of platinum for 4 ounces of gold down the road.
With respect to the miners in the metals, do you think that they're overvalued right now or undervalued with respect to the metal?
GDX is roughly half of its all-time high, where gold is right at its all-time high. So that tells you all this, that tells you the story right there. GDX would have to double just to get back to where it was back in, I think, 2011, if I remember right, was the all-time high, where the metal itself is there. So these mining stocks have a lot of catching up to do. And there's a lot of money to be made for those who can handle the inherent volatility in those mining stocks and not be shaken out at the worst times. That's what happens, unfortunately, to retail investors, is they tend to sell at the absolute worst time. Think back to September and October of last year. Sentiment was down the tubes, and I'd see it all over Twitter. I'm selling all my mining stocks. Like, that was the absolute worst time to do that. But that's when the average retail person does it. And then that's where guys like Rick Rule and the Doug Caseys of the world scoop it in and say, yeah, I'll take some of those. But mining stocks are still undervalued, yes.
As for other opportunities you see right now, it seems like uranium is kind of beaten down right now. Your perspective on that market?
It is. And I love uranium because it's a pure supply-demand story. It's got bullish fundamentals. And to be honest, I'm pretty good at not letting my emotions get in the way when trading. But I have zero emotional tie to uranium at all. Like, I don't care. I'm just trading the chart. And I think because of that, I've traded it a lot better than some of the other things that I look at. I have no problem pushing the sell button when things get overbought. And we took significant profits back in like November 2021. But when you look at a chart here of uranium, this is the physical metal. That is a very bullish looking chart. The price got severely depressed down here back in 2016, sub $20. The world was swearing off nuclear and uranium in light of the Fukushima disaster in 2011. Well, this was a contrarian's dream down here. And we've since run nicely up to 63, but we've also pulled back. And now we're consolidating in bullish fashion, right about $50 uranium. I think eventually 63, 73, 100, and even $148 uranium are in the cards in the years ahead. And what's really exciting about uranium right now is the metal has been very resilient, but the uranium mining stocks have just been taken to the woodshed. So the ratio of uranium miners versus the metal itself is at a very, very favorable entry point right now for uranium miners. And I'll show you a chart of that right now, how we're sitting right at that support. So this is URNM, that's the Sprott Uranium Miners ETF versus the metal itself. And you can see that this line is key support. We've tested it a handful of times over the past few years, and we've rallied. So if this ratio returns to where it was, you can expect the equities to outperform the metal by over a factor of 2. And that's just getting back to where we were a couple of years ago. And I think we're probably going to exceed that ratio. So there's a very compelling value proposition, especially from a contrarian perspective right now in uranium. And sorry to be so long-winded, but I'll show you one more chart here of URNM itself. And here's the daily chart. So I call this the best buy accumulation line. So whenever you pull back to the support, I think that's a compelling value proposition. We're sitting just above that right now. You can see how beaten down the sector is. This ETF was up at $51 in November of 2021. That's around where I took some pretty big profits up here. But now we're back below 30. So we would have to have a 50+% rally just to get back to where we were, and I think that's coming.
Fantastic. Well, Steve Penny, we really appreciate your time today and you sharing your insights on all these markets. Where can our viewers find you online? I know we have an affiliate link, which we'll put in the description of this video, silverchartistliberty.com, if people just want to type it in there. But any last thoughts for our viewers, and remind our viewers about your service?
Great. Yeah. Thank you for inviting me on. It's always a pleasure to speak with you. I think you've got a great audience here, and they are welcome to come check us out at silverchartist.com. It's a fully transparent, over-the-shoulder service with real-time alerts. So I share my exact portfolio, the exact stocks I own, and I send out real-time alerts. Anytime I buy or sell, I send out an alert to members. Not necessarily because I'm perfect and because you should do what I'm doing, but hopefully that full transparency helps our members to be better investors and speculators in their own accounts. silverchartistliberty.com. silverchartistliberty.com is a discount link just for your listeners.
Fantastic. Thank you so much, Steve, for your time today, and God bless.
Thanks, Elijah.
Miles Franklin Precious Metals is one of America's oldest and most trusted bullion dealers. Miles Franklin is A+ rated and accredited by the Better Business Bureau, licensed and bonded, and has 0 complaints ever registered. Here at Liberty and Finance, we are licensed brokers with Miles Franklin. To order, simply call us, discuss your needs, and we can let you know our live inventory, prices, and availability, and lock in your order over the phone. Once your order is locked, the price is held for you regardless of market fluctuations, and the metals are reserved for you awaiting your settled payment. Within 1 business day of ordering, you will receive an email invoice detailing the order and payment instructions. Miles Franklin accepts payments by bank wire, ACH or electronic check, money order, check mailed priority mail, and cryptocurrency. The fastest forms of payment are bank wire and cryptocurrency. Upon settled payment, metals will ship out within 3 to 5 business days. You will receive tracking information via email. Domestic shipping charges are $15 for any order under 500 ounces of silver or 10 ounces of gold. For orders larger than that, domestic shipping is free. The package will be boxed, fully insured, and labeled discreetly, with no indication of the contents inside. For your privacy, the name Miles Franklin will not even be on the package. To talk to myself, Kaiser, my brother Elijah, or my father Dunnigan, call 1-888-81-LIBERTY. That's 1-888-815-4237.